Hey, this is Big G, or Gene, or Gino, or Dad, or however you know me. And this is lesson number 11. We're going to talk about chart patterns, and this could be a really long lesson, but I'm going to try to make it short and just introduce patterns to you and show you a few examples because this one maybe kind of takes a while to learn, and you don't necessarily need to know all these patterns. Just know they're there and know what they are. Some traders look for specific patterns, and that may be all they trade, while other traders use other things. And the next video, lesson 12, is going to talk about candlestick patterns, and I tend to look for candlestick patterns more than I look for chart patterns. But tonight, in this lesson, we're going to do chart patterns, and I found this graphic online to give you a good idea of chart patterns. And so the black line, of course, is the price, stock price, and we've got all these different types of patterns. You've got the double top, which is considered a reversal pattern, where it hits the high twice there and then tends to go down. You have what they call a head and shoulders pattern, with the head in the middle and two shoulders on the side. Head and shoulders pattern typically is a bearish pattern. Once it breaks through the neckline, it tends to go down to kind of back down where it started. That's true of the double top as well. You've got a rising wedge pattern, which looks kind of like a flag or a pennant pattern. There's several, like this is a bullish pennant pattern. This is a bullish rectangle, falling wedge. All these things kind of look alike. I call them flag patterns. Some people call them flag patterns because they look like a flag with the big flag pole, and some are like rectangles and some are pennants. And then you've got ascending triangle, which is typically a bullish pattern. They're showing it to go either way in this particular graphic, but ascending triangle is typically a bullish pattern. Once the price breaks out over this high, it tends to run up. And you may notice on this particular graphic, they're showing you these blue lines entry, where you would enter and where you would exit. It's interesting because a lot of times you can set your target to be about the size, in this case, of a bullish pennant, about the same size as that flagpole there. You can guesstimate or estimate that once it breaks out, it's going to travel about the same distance. And I don't know why that is, but it does seem to work. And that's where they get these target. When you see they have entry and target here, that's where that's coming from. They're matching, basically the move it had made previously, whether it was up or down. So these are chart patterns, and let me show you a few that in real life, I guess you'd say. This is Chevron. In the last video, we looked at this chart, and Chevron has a couple of patterns. In December, it had a flag pattern, and let me get my marker out here. Here we go. You see this big candle here has a little flag there for a few days, broke out to a new high and kept running up. Actually started a little flag pattern here too that ended up becoming bearish. And then this is a big long pennant here, that long flagpole, and you've got this wedge or pennant, as some people call it. And this is Monday night is President's Day today, so today was a holiday. So tomorrow, Tuesday, it'll be interesting to see which way this goes, because it may continue out, this way a little bit longer. May go up, may go down, but the tendency is once it breaks through these trend lines, it's going to follow that path for a while. So that's CVX. We can go to JP Morgan. And what did I do here? JP Morgan. There we go. And JP Morgan has an ascending triangle in it here, I found. And get the marker back up and running again. That's why I was making the funny noise. You see where it hits resistance here? It's kind of flat line there a little bit, but then you've got this ascending triangle forming with the same high for a while and resistance here, but you had higher lows, higher lows, higher lows, higher lows, and it finally broke out right here and took off. So that's an ascending triangle. If you look back at this graphic, here's your ascending triangle right there, where it has the consistent high, keeps hitting resistance, but it has higher lows, and finally it breaks out. So that is JP Morgan. Hide this thing, get back to here, and let's go to Amazon. Amazon has an ascending triangle, its chart pattern, and right around here, get the marker back up and running. Whoops, I think I hit the wrong button there. And Amazon kind of right there and right there, a little bit of an ascending triangle there. So once it broke out over that price, you might enter that right there at about $1,200, and you would ride it on up to $1,500 maybe. There was one more. Oh, General Motors. And let's see what we got here. General Motors actually has a wedge forming right now. Little marker things messing with me tonight. Anyway, look at this wedge pattern here for General Motors. So same thing as we looked at Chevron. We just watch for that and see which way it goes. If it breaks down here, it's likely to continue down a little more. If it breaks up here, it's likely to come back up here to this resistance level right up here. So you can learn more about chart patterns. Actually, the easiest way is to go back to our friend Finviz. Finviz has preset chart patterns for you. There's a wedge up, even it shows you the little diagram there. There's ascending triangles, descending triangles, wedge down, wedge up, head and shoulders. There's also inverse head and shoulders on here that is on the screener. When you go to the screener and you go to signal, it gives you all the options down here. So inverse head and shoulders is down here. So Finviz has just a great tool. It's a place for you to just kind of playing around with Finviz and learn and watch some of these chart patterns. And then you also can go to stock charts, go to chart school, and if you hit chart analysis, then it talks about trend, support and resistance trend lines that we talked about already, and then it talks about chart patterns, introduction to chart patterns, and then here's all of them right here. The flag dependent symmetrical triangle is ascending triangle, descending triangle, falling wedge, right? All those that I showed you in the diagram here, they're right here on the stockcharts.com. So you can really kind of geek out on this stuff. And like I said earlier, it's probably good to be familiar with these and just know they're there. But just be familiar with the different patterns. But to try to memorize and locate all these all the time might be a little much. But it's good to know these patterns and know it when you see it, kind of thing. One more I was going to show you on stock charts was Netflix. I noticed another pattern that wasn't on that graphic that I showed you called a cup and handle. And a cup and handle pattern is kind of shaped like a cup, and it meets the same price here. Then it goes down a little bit, it forms the handle, and after the cup and handle, it pulls back a little bit, and then it tends to go up. And you can see here on Netflix, there's cup. There's the handle, pulls back a little bit, and then it goes up right here from what, about $180 to over $200 right there. $20 move in just a matter of about 2 weeks here on this daily chart. And actually, even right now, it looks like Netflix may be forming a cup and handle now. It may very well hit this previous high around 285, see if it pulls back a little bit and then goes up. I don't know. We'll have to wait and see. The market's unpredictable, but knowing these things and being familiar with these things helps you to at least project what might happen. It helps you to control your risk. Remember, you want to be a risk manager, not a risk taker. So that's lesson 11, and a lot to learn with that one. Get around on Finviz, play around with it, get on stock charts, learn some of these patterns, get familiar with them, and you'll start seeing them as you start looking at charts more often. Anyway, see you next time.